you bring up the great analogy and comp, right? Which is 2000 to 2002. And it was exactly like we're going through today. And it was the result of this long-term trend in technology. So technology evolves over a 14-year cycle. Why it's 14 years has to do with kind of the creative class being young people, and it's half a generation. But it's, 1954 was the mainframe, then 68 was the microchip, then 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024, still coming, is the truth net or the blockchain era. And what happened from 96 to 00 was you had this internet thing get created. And people were like, oh, it'll never be more important than the fax machine, according to Paul Krugman. And it's a fad and it'll pass. And the newspapers said it was terrible. And all these companies like Netflix and Amazon, they were horrible. But you had this bull market from 96 to 00. And then we had a crash. And that crash, right, it killed off all the bad stuff. Right? And it was necessary. And so 90% of the bad stuff went away. The art.com, art technology groups, right? They were the company that helped you turn your company into .com. No value, just change the name to .com and the stock price went up. And there was a thing called Digital Island, which was a little hosting business out in Hawaii. And that was replaced with subsea cables. And so there were a lot of things that needed to go away because we got in a bubble, right? Up to the point recently, the worst bubble in history. And what was interesting is as the bubble popped, the bad companies went away. Pets.com disappeared. Chewy.com today, 30 years later, is the same company. It's the exact same company. 20 years later. It's the exact same company. It just, we needed GPS tracking, we needed broadband, we needed more penetration of the internet. And so it was ahead of its time. And Webvan, right, is Amazon and Whole Foods today. And Amazon in 01 to 02 went down 94%, right? Everybody remembers that. When was the right time to sell it? Well, not then. That was time to buy, but everybody was running away. And so inevitably we get these cycles. And just like in crypto, so crypto is here to stay. Right? Blockchain technology is the next operating system for the Internet of Value. So you and I are using voice over Internet protocol right now to talk and video over Internet protocol. And the incumbents hated that, right? They tried to pass a law in 1996, 97 to stop voice over IP. The telephone companies paid regulators to try to pass a bill. And Al Gore, right? He didn't invent the internet, but he did kill that bill. He said, no, that's stupid. We're not going to stop innovation. And so I give him a lot of credit. And similar what's happening today is the regulators are saying, oh, we got to clamp down on this and all this bad malfeasance. I'm like, how many banks have failed since 1987? A lot, like hundreds and hundreds. How about the global financial crisis? Was that pretty bad? Yeah. Did we stop using banks? No. Did we stop transferring money between banks? No. Did we stop investing in the stock market because it went down a lot? No. So this idea that suddenly this technology is going to go away is silly. Now, are the regulators going to try to beat it down because the incumbents want it to stop, right? The banks are being displaced by blockchain the same way that media and commerce was displaced by the internet. Because if you think about the internet, what is the internet? It made information ubiquitous. It made information bidirectional for the first time. And so you didn't have to watch Happy Days. You'll remember this. Happy Days on Tuesday night at 8 o'clock, right? And Laverne and Shirley at 8:30. You didn't have to sit in your tray, in your chair behind your TV tray, eating your TV dinner, watching Laverne and Shirley, because you can watch it anytime you want now because you can stream it. And so all that market cap that used to own to ABC, NBC, CBS, now it resides at Netflix and other streaming companies. So the same thing's happening to the banks. The banks are seeing assets leave to these alternative forms of financial services because what blockchain does, it replaces trust with truth, right? In the old days, I lent you money and you had to rely on me being trustworthy because I kept a ledger. I had a single entry ledger and I wrote down Blake owes me $100. But I'm an unscrupulous guy, so I wrote down 200. You come back to pay me back 110 next year. And I said, oh, you owe me 220. No way, I only borrowed 100, says right here in the ledger. So the Medicis, 1,200 years ago, came along and said, no, that's a bad system because we don't trust Mark. So Blake, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will decide that the ledgers match and what's the right number. So we will be the trusted third party to establish truth. So I lend you $100. You come back. I wrote down 200. I paid off the Medicis to say that my number's right. You owe me $200. So it can still be messed up. And, banks have paid $360 billion of fines for bribery, money laundering, all kinds of malfeasance, because it turns out you can't trust everybody all the time. So what blockchain does is it replaces trust with truth. So if I want to send you money today, you have to have a bank account. I have to have a bank account. I send you the money and they charge a fee. Well, wait a second. Why do we trust them, right? I have this recurring nightmare, Blake. I go to the ATM, I punch in my code, and it says 0. Like, how would I prove it's not 0? I don't have any statements. I haven't had a statement in 10 years. And it's their word against mine. They're bigger, more trustworthy, right? So people say, Mark has no money. So I send you the money and there's no money there. Bank of America took it. So, and I'm not saying they did take it, but they could. So with blockchain and Bitcoin in particular, right? I have a Bitcoin. The network says thumbs up, Mark has a Bitcoin. Okay. No banks, no third parties, just the network, the algorithm. Okay. I send it to you. You've got it. Network says, yep, that happened. Okay. Now you've got it. It's Blake's irreversible, immutable, permanent truth. It's truth that Bitcoin went from me to you. And it's on a public ledger, immutable record for everyone to see forever and ever. I can't take it back. I can't say, oh, I didn't mean to do that. Oh, Blake fooled me, whatever. That transaction happened. And so by replacing trust with truth, we take $7 trillion. $7 trillion. That's a big number, right? $7 trillion of waste that goes into bank fees, overdraft fees, transfer fees, custodial fees, accounting fees, auditing fees. Think about this. If you and I were a bank and we made a loan and then a hedge fund wanted to buy that loan from us, it would take them 30 days to settle that bank loan. Because there are 7 different computer systems, one written in COBOL, one written in Fortran, one written in C++, and one in Java, that all have to talk to each other and reconcile. And you got to pay a bunch of fees to finally get the fact that, yep, Bank of Mark and Blake did this loan, and that, whatever hedge fund, Perry Partners, decided to buy it. So that's crazy. That should happen instantaneously. If I want to sell you a share of stock, well, one, I should actually own the stock. Like my stock right now, it's not mine. It's UBS's. It's in UBS's name. I have an IOU to UBS. And if I sell it to you at Merrill Lynch now owns it. UBS doesn't own it. It sits at DTCC in a file drawer. You have a claim from Merrill Lynch, which is like your money in the bank. It's not your money. It's the bank's money. You have a claim, an IOU, that is good most of the time. But what happens if UBS goes out of business? Well, then you got to stand in line and try to get your money back or your shares back. So all of this goes to saying, what do we like? We like infrastructure, right? We like the exchanges. We like the software. We like the tools. So we have a fund that invests in the companies, right? So we've invested in 70 different companies. The most exciting one right now is actually a physical hardware company called Ledger. And they make, I believe, the iPhone of the TruthNet, which is they make a wallet, a hardware wallet that will allow you to store your crypto securely. And they custody 20% of all the crypto in the world. Great company out of France. And they just released a version that looks and feels like an iPhone. So if you think about the browser made the internet ubiquitous. Before the browser, the internet was a pain in the neck. Remember the AOL, kind of dial-up modem, just horrible experience, right? You couldn't download a movie. It took 4 days to download a movie, so no one would ever do it. So Netflix almost went bankrupt. And you needed broadband, and then you needed better communication technology. So we've made those strides, and then this came along in 2007, and people said, "I'm not paying $500 for a phone," and stock price went down 40% in a week. Apple went down 40% because people said, "I will never own a smartphone." Well, yes, now you own 2 smartphones and you don't pay $500, you pay $1,500. So the key is that functionality is what everybody demands. And the same thing with a hardware wallet, you're going to want to have pure security of this because they are bearer assets, which is one unique thing about crypto. It's a little bit back to the future in terms of coins and currencies and bearer assets. So they got to be safer. So you can't do it on a phone, which can be hacked and SIM swapped and steal all your crypto. So this browser moment of, I think, Ledger announcing their new thing called the stacks, I think is pretty cool. So lastly, I'll say that still pretty excited about Bitcoin. It's the future of money. It is a better form of money. Money is an asset that exists in the absence of a liability. Gold is the only money in the world. Everything else is credit. It's currency. It's backed by debt. And we're going to see how bad that is going forward in the next couple of years as debt prices get whacked because of interest rates. And so ultimately, Bitcoin is a better form of gold, digital gold, because it's lighter weight and easier. Like if I had a bar of gold here and I wanted to break it in half and give you half of it. Well, first of all, I couldn't break it in half. I think I'm a strong guy, but I'm not that strong. And then I couldn't stuff it in my computer and send it to you, right? It just doesn't physically do that. If I have a Bitcoin, I can break it in half and I can send it to you instantaneously. And I can do it down to one Satoshi, 1/100 millionth of a Bitcoin.